Every successful real estate investor knows the secret isn't just finding the right property, it's making your money work for you again and again. The real power in real estate comes from understanding how to leverage your investments so your initial capital doesn't just sit idle, but keeps fueling your growth. Imagine being able to buy a property, improve it, and then get your money back to do it all over again without ever having to sell. That's the key to scaling up quickly and efficiently. The magic? Refinancing. This strategy allows you to buy a property, fix it up to increase its value, and then pull your initial investment back out, all while keeping a cash-flowing asset in your portfolio. It's like hitting the reset button on your capital so you can keep moving forward. Renovations not only improve the property, but they also boost its market value, making it possible to access more funds through refinancing. Instead of letting your cash sit trapped in equity, refinancing lets you unlock it without selling, losing rental income, or paying hefty transaction costs. You get to keep your property, continue earning monthly rent, and avoid the hassle and expense of selling and buying all over again. This approach is especially powerful because it keeps your money working for you, compounding your returns over time. This is the engine behind the BRRRR method: buy, rehab, rent, refinance, repeat. Each step is designed to maximize your returns and minimize the time your money is tied up. By following this process, you can systematically grow your portfolio using the same pool of capital to acquire multiple properties over time. The refinance step is where your hard work pays off. By increasing the property's value through smart renovations and getting it rented to reliable tenants, you can borrow against that new, higher value. Lenders are more willing to offer favorable terms when they see a well-maintained, income-producing property, which means you can often access even more capital than you originally invested. A successful refinance means you pay off your original loan and get your investment capital back, ready for your next deal. This cycle can be repeated, allowing you to build momentum and scale your investments much faster than if you had to save up for each new purchase. It's a strategy that rewards both patience and smart decision-making. This is how investors turn one pot of money into a growing real estate portfolio. By recycling your capital, you're able to acquire more properties, diversify your holdings, and increase your cash flow, all without needing to constantly come up with new funds. Instead of saving for years for each new property, you recycle your capital, letting your assets fund your expansion. This approach accelerates your path to financial freedom, as each property you add brings in more income and more opportunities for future growth. Mastering the art of the refinance transforms you from a hobbyist into a serious real estate entrepreneur. It's about thinking strategically, planning for the long term, and using every tool at your disposal to maximize your results. The more you refine your process, the more efficient and profitable your investments become. It's about building a self-sustaining system, monthly cash flow and capital for future growth. With each successful refinance, you're not just growing your portfolio, you're also creating a reliable stream of income that can support your lifestyle and fund your ambitions. That's how you create generational wealth through real estate. By mastering these strategies, you're not just building wealth for yourself, you're laying the foundation for your family's future, ensuring that your hard work benefits generations to come. Not all refinances are created equal. Each type serves a different purpose, and understanding the distinction is crucial for making the right financial move, especially if you're an investor looking to maximize your returns. For investors, there are two main types of refinancing to consider: rate and term and cash out. Each comes with its own set of benefits and strategic uses, depending on your goals and the stage of your investment journey. Rate and term refinancing is designed for homeowners or investors who want to lower their monthly payments by securing a better interest rate or to adjust the length of their loan term. There's no extra cash involved, just improved terms that can help you save money over time or pay off your loan faster. But for BRRRR investors, those who buy, rehab, rent, refinance, and repeat, the cash-out refinance is the real game changer. It's the tool that unlocks your property's hidden potential and lets you recycle your capital for the next deal. With a cash-out refinance, you take out a new, larger mortgage based on the property's increased post-renovation value. This means your hard work in improving the property directly translates into more accessible funds. The lender pays off your old loan and you pocket the difference, often enough to cover your original down payment and renovation costs. Best of all, this cash comes to you tax-free, giving you more flexibility to reinvest. Lenders typically allow you to borrow up to 75 to 80% of the new appraised value, though this can vary based on your credit profile and the lender's policies. It's important to know these limits before you start the process. For example, imagine you buy and rehab a property for $150,000. After renovations, the property appraises at $200,000. You can now get a new loan for $150,000, meaning you've pulled your cash back out and are ready for your next investment. While rate and term refinancing can improve your cash flow by lowering payments, only a cash-out refinance gives you the power to scale your portfolio rapidly by freeing up your invested capital. Choosing the right refinance strategy isn't just about managing a loan, it's about managing your capital for continuous long-term growth. The right move can set you up for future opportunities and greater financial freedom. Make your equity work for you, not the other way around. With the right refinance, you're not just building wealth, you're building momentum for your investment journey. Let's break down the numbers behind a BRRRR deal, step by step, so you can see exactly how this strategy works in real life. Understanding the math is crucial to making smart investment decisions and maximizing your returns. Imagine you find a distressed property listed for $120,000. It might look rough on the outside, but that's where the opportunity lies. These are the kinds of homes investors love because they have hidden potential. You decide to invest $30,000 into renovations, updating the kitchen, fixing the roof, maybe adding a fresh coat of paint. Now your total investment is $150,000. This includes both your purchase price and the cost to bring the property up to rental standards. Once the rehab is complete, you find a tenant and rent out the property. Now, it's generating monthly income, and you've improved the neighborhood in the process. After all the upgrades, the property is appraised at $200,000. That's a significant jump in value thanks to your smart improvements and market research. The lender steps in and offers a cash-out refinance at 75% of the new appraised value, which comes out to $150,000. This is a common loan-to-value ratio for investment properties. You use those funds to pay yourself back, recouping your entire initial investment. Essentially, you've pulled all your money out of the deal, and you still own the property. Now, you're the owner of a $200,000 rental property that's cash flowing every month, and you have zero of your own money left in the deal. Your risk is minimized, but your rewards keep coming. This is what's called an infinite return. Because you've recycled your capital, you can use it again for your next investment, all while still owning the asset and collecting rent. The key to making this work is running accurate numbers from the very beginning. You need to know your purchase price, estimate rehab costs carefully, and have a realistic sense of the after-repair value. If the math checks out, you can repeat this process over and over, building a portfolio of cash-flowing rentals with the same initial capital. That's the true power of the BRRRR strategy. It lets you scale your investments quickly and efficiently, turning one deal into many. Get the numbers right, and you'll build wealth on autopilot, watching your assets and cash flow grow with each new property. That's how you scale fast, create lasting wealth, and achieve financial freedom through real estate. Timing is critical in real estate, especially with cash-out refinances. Lenders require a seasoning period, usually 6 to 12 months, before you can refinance based on the new value. Finish your rehab in 2 months? You might still wait months before accessing your cash. Calculate holding costs, insurance, taxes, utilities, loan interest, so you don't run out of money during the wait. Always ask lenders about their seasoning requirements before you buy. Some local banks or portfolio lenders may offer more flexibility. Plan your timeline and budget carefully. Timing can make or break your deal. The appraisal determines how much cash you can pull out, so make it count. Start with high-impact renovations, kitchens, bathrooms, and curb appeal. Present a spotless, well-maintained property when the appraiser visits. Prepare a packet list of upgrades, before and after photos, costs, and a copy of the lease. Include recent comparable sales to support your target value. Be present for the appraisal. Point out major improvements, but don't hover. Your goal: help the appraiser see the full value you've created. A strong appraisal means a bigger loan and more cash back. Small details matter. Don't leave value on the table. Preparation is your best tool for a successful refinance. The lender you choose can make or break your refinance. Big banks offer low rates but strict rules, long seasoning periods, tough underwriting. Local credit unions and community banks are more flexible, sometimes with shorter seasoning and personal relationships. Portfolio lenders keep loans in-house, offering maximum flexibility on terms and underwriting. DSCR lenders qualify you based on the property's income, not your personal finances. Great for scaling, but rates are higher. Shop around and compare options. Don't just chase the lowest rate, find a lender who understands real estate investing. Build relationships with lenders who support your strategy. The right financial partner is as important as the right property. Choose wisely to fuel your growth. Even experienced investors make mistakes. Avoid these common pitfalls. Overestimating the after-repair value can sink your deal. Be conservative and use real comps. Ignoring seasoning requirements leads to cash crunches. Always confirm timelines with your lender. Poor record keeping hurts your appraisal. Track every upgrade and keep receipts organized. Choosing the wrong lender can stall your growth. Find one who understands BRRRR and investor needs. Don't just pick the first lender or the lowest rate. Interview multiple lenders and ask about their experience with investment properties. Plan for holding costs during the seasoning period. Stay organized, realistic, and proactive. Avoid these mistakes, and your refinance will be smooth and profitable. Preparation is your best defense. The final step, closing, turns your equity into cash. Review your closing disclosure carefully. Compare it to your original loan estimate. At closing, sign the new loan documents and pay off the old loan. The title company handles all payments and closing costs. The leftover cash, your proceeds, are wired to your account or handed to you as a check. This is your victory moment. Your initial capital is back, and you still own the property. Double-check all paperwork and ask questions before signing. Now you're ready for your next investment. Walking away from closing with your investment capital back is just the beginning. The real power is in repeating the process, using the same money to buy, rehab, and refinance again and again. Each cycle adds another cash-flowing property to your portfolio, building wealth and passive income. Your capital becomes a reusable tool, not a one-time expense. As your portfolio grows, so does your cash flow and your ability to qualify for more loans. This is how investors scale from one property to dozens, without saving for every new deal. Mastering the refinance is the key to financial freedom. It's not just about tactics, it's about building a business and a legacy. The BRRRR strategy, powered by cash-out refinancing, unlocks unlimited potential. Use your capital wisely, repeat the process, and watch your real estate empire grow. Your future is built one smart refinance at a time.